A good afternoon or perhaps early evening to you, and thanks for joining us. Holly Shields here for 𝐾𝐿 TV, and you're watching the last show of the day, The Last Trade. There's no better way to wind down the day than with today's market close commentary, so let's dive in. Australian shares closed lower in volatile trades, and gains in mining stocks were offset by losses in bank, tech and healthcare stocks. The market witnessed a sharp selling post-lunch soon after the report came in that Melbourne will go into a snap lockdown from midnight tonight. The intention is to break the chain of the growing COVID-19 pandemic. The S&P ASX 200 fell 18.80 points or 0.26% after opening lower earlier today, following muted cues from US stocks that settled mixed overnight. The market shrugged off robust jobs data that showed the unemployment rate falling to a 10-year low of 4.9% in June. However, the focus remained on lockdowns in Sydney and Melbourne. Concerns about the virus situation in the country continued to weigh on the market. And in the last 24 hours, New South Wales reported 65 new locally acquired cases compared to 97 registered yesterday. That being said, 28 of these new cases were infectious while in the community. And Victoria has reported 2 new cases, while the list of exposure sites grew by more than 70. The administration is reportedly considering a snap lockdown from midnight to contain another outbreak. On that note, let's turn our attention to the biggest gainers and losers of the day. Among the individual stocks, healthcare firm PolyNovo was the top percentage loser on the ASX, as the stock fell well over 9%. Some of the other worst performers were BNPL player Zip, tech firm Nuix, financial services firm Credit Corp Group, and corporate bookmaker PointsBet, as well as the travel firm Corporate Travel Management. On the winner's side, car parts manufacturer ARB Corp was the top performer on the ASX with a 7.5% gain, so hats off to them. And the other notable gainers were utility firm Spark Infrastructure Group, mining firm St. Barbara, coal miner Whitehaven, and industrial firm CSR, as well as the global online marketplace Redbubble. And now let's shift our focus onto the sector-specific performance. On the sectoral front, 9 of 11 indices ended in the red. Healthcare, unfortunately, was the worst performing sector with nearly 1.5% in loss, followed by tech, which dropped 1.2%. Among others, AREIT, financials, industrial telecom, and consumer staples were among the other top losers. On the flip side, material sector emerged as the top performer, raising 1.3%. Utility stocks also ended higher with a 0.4% gain. And in the tech space, the BNPL firms continued their losing streak for the second day. Perceptions of rising inflation as well as the fear of competition from global players spooked investor sentiment. The sell-off was triggered by news from the US digital payments giant PayPal, who launched a fee-free installment payment product in Australia to take on the homegrown BNPL firms. Australia's largest BNPL firm, Afterpay, Zipco Split Payments as well ended lower. And onto the energy space, Beach Energy, Santos and Oil Search all ended in the green zone. In the mining space, index heavyweights BHP fell while Rio Tinto and Fortescue Metals closed higher. Among the gold mining stocks, Silver Lake Resources, Newcrest, Evolution, Ramelius and Gold Road all closed higher. Moving on, let's have a look at the ASX stocks which created a real buzz today. Talk about sizzling hot stocks, the share price of fintech firm Sezzle rose as much as 5.6% to $8.41 after the company secured funds from Discover Financial Services. The company said Discover will invest $30 million in Sezzle as part of plans that will see the two firms launch a buy now, pay later payments network in the US. The announcement came a day after ASX-listed BNPL stocks tumbled on the looming threat of Apple, PayPal and Commonwealth Bank entering the space. And another fintech player, Humm Group, saw its shares gaining 1.5% to hit an intraday high of 98.5 cents. In exchange filing on Wednesday, Humm said that it had entered into a joint venture agreement with Redbird Ventures, a subsidiary of Westpac, New Zealand. The company hopes to launch a new BNPL product known as Bundle, which has been built for organizations looking to enter the customer-first BNPL market. This is the first agreement under Humm Group's global partnership with MasterCard. It'll allow customers to BNPL wherever they like with no minimum spend, the first of its kind in NZ. And now, before we look at the shares that are in the news today, it is time for a short break.
Hi, this is Andy Liu broadcasting from 𝐊𝐶𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐶𝐞 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐶𝐞 TV and join me.
Welcome back, I'm Holly and you're watching 𝐊𝐶𝐞 TV, live from Sydney. This is the last show of the day, the last trade. Woodside Petroleum shares declined as much as 1.8% to $23.20, despite reporting a strong performance in the second quarter. The Aussie Petroleum Exploration and Production Company has reported a 67% growth in sales revenue for the second quarter. Growth was driven by higher realized prices for the natural gas and oil sector. The revenue from this sale during the period was higher than the first quarter and was supported by an above-market average realized price of 75 Australian dollars per barrel, while revenue from LNG shares climbed 14%. And next up, the share price of investment management firm Pendal Group gained as much as 2.4% to $8.20. The shares extended gains for the fourth consecutive session, as the firm said in an ASX update that its June quarter funds under management rose $106.7 billion, up to 5% from the March quarter. The company now continues to see the strength of its US region and potential for future growth, especially related to the flows, FUM, and margins. And electricity infrastructure investor Spark Infrastructure Group jumped as much as 7.5% to $2.60 and was among the top gainers on the ASX. The company has received a buyout proposal from a consortium led by Canadian pension fund, Ontario Teachers Pension Plan Board, and US private equity 𝐾𝐲 𝐿. The consortium has offered to buy Spark at $2.80 per share, at a market value of $4.91 billion. And it's May Day for the next share, as Sydney Airport saw its price falling as much as 1.9% after the company rejected a $22.26 billion takeover proposal. The operator of Australia's largest airport said that the $8.25 per share offer by the group of infrastructure funds undervalued the company. And in the yellow metal space, the share price of gold explorer Dacian Gold slipped as much as 6.5% to 29 cents on a drop in production. The company said its production for the financial year 21 stood at just over 100,000 ounces, lower than previously estimated. And the share price of software firm Schroll Group rose nearly 8% to 1.4 cents on releasing its Schroll Connect 3.0. Schroll is a global SaaS provider to education professionals and institutions. Schroll Connect is an online SaaS platform enabling international schools to streamline teacher recruitment and candidate management activities. Onto the medical world now, and shares of biotech firm Actinogen Medical climbed nearly 9% to 12.5 cents on enrolling patients for the 𝐧𝐶𝐼 trial. The company had enrolled the first patient for its 𝐧𝐶𝐼 trial, with the patient targets with mild cognitive impairment due to Alzheimer's. And now, before we look at the shares that are in the news today, it is time for another break. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements.
With 𝐾ALKINE TV. Welcome back from the break. I'm Holly and you're watching 𝐾ALKINE TV live from Sydney. This is the last show of the day, the last trade. Let's have a look now at the next company in the news. Shares of food and beverage company Forbidden Foods fell nearly 4% to 25 cents. The company has signed an exclusive distribution agreement for its products Funch and Sensory Mill to distribute them in the Philippines markets. The agreement has been signed with a wellness brand called Moshi. And Total Brain on Thursday said it had entered into a 3-year contract to provide its mental health software to Eastman, a US-based global specialty materials company. Based in Kingsport, Tennessee, the US, Eastman serves customers in more than 100 countries and is a member of the Fortune 500 group. Moving on to the last ASX-listed company in our list today. Tasman Resources has informed its shareholders that there was a significant growth of OptiBlend in the Indian market. OptiBlend is a dual-fuel system that enables a diesel generator to use natural gas as its primary fuel without modifying the engine or the diesel fuel system. And now to the final leg of the show, let's focus on the global equity markets. Asian shares staged a smart recovery, pairing opening losses on US Federal Reserve Chairman Jerome Powell's dovish comment on inflation. In a testimony to the US House of Representatives, Financial Services Committee, Powell said that he was confident that the recent price hikes are associated with the country's post-pandemic reopening and would fade. China's Shanghai Composite was trading 0.5% higher, while Hong Kong's Hang Seng surged 1.4%. In a similar trend, Taiwan's weighted index rose 0.7%, while Seoul's Kospi was up 0.5% as well. Meanwhile, Japan's Nikkei emerged as the worst performer in the region, falling over 1.2%. And Singapore's Straits Times was also down 0.3% as well. In the overnight trade, Wall Street finished mixed amid worries about interest rate hikes following a spike in inflation. In the volatile trade, the Dow Jones gained 0.13%, while the S&P 500 surged 0.12%. The tech-heavy Nasdaq Composite ended 0.22% lower as well. Well, that is just about all for now in the last trade. With our existing operations in Australia, New Zealand, the UK and Canada, 𝐾ALKINE Media has launched its operations in the US markets as well. Every day on our first show, the Global Market Updates, you can get the latest and most important news from the US, UK and Asia Pacific markets. So on that note, I'll see you tomorrow at 10 a.m. live from Sydney. Holly Shields signing off.